Fairly sad news this morning to hear upon waking up that Shane Warne had passed away at the young age of 52. It was bad enough that Rod Marsh had passed away, but he was in his 70s. 52 is way too young, particularly for someone like Shane Warne. And I still remember Shane Warne's very first game against India. Would have been either late 91 or early 92 at the SCG. He got 1 for 150. The Indians absolutely loved him. They smashed him all around the park. But he came back with a vengeance later in 92, the SCG, and he absolutely tore apart the West Indies. Got 7 for 52. And if you remember back in those days, the West Indies were the cream of the crop. They are the team that we wanted to beat. We came very close to beating West Indies in that test series, 92-93. We fell maybe something like 5 runs short. If you remember that test, was it Adelaide test, where we got so close to actually beating the West Indies. But that was the test, the SCG, where Shane Warne made his name in the test arena. He went to New Zealand in early 93, did okay there, but it was the Ashes in 1993, particularly that first Ashes where he bowled Mike Gatting with his first delivery in an Ashes test. I still remember that delivery, still remember Mike Gatting's reaction. It was like disbelief. What the hell happened? He actually looked back at his stumps and just could not believe the delivery that was Shane Warne bowled against him. It was an absolutely stellar delivery. So Shane Warne, one of the greatest cricketers of all time, and really reinvented leg spinning. So this video is dedicated to Shane Warne. Hey there, welcome to Kneppy Invest. I thought I'd do a bit of an update to Betmakers. We are seeing a fair bit of negative sentiment in this space. This is a company that is growing fairly quickly, impressive revenue growth over the past few years. That is still happening right now, but the valuation got probably a little bit ahead of itself. The share price has been pulling back, which is fairly typical for these type of companies that are unprofitable, fairly high valuations, and growing quick at the top line. What the market is telling these companies right now is, show us the money, show us you can become profitable, show us that you do have scale, because that really is the important thing moving forward, particularly if we do see interest rates moving higher, and even more important, if because of all the stuff happening in the world right now, and there's a lot of possibilities moving forward. And some of those possibilities include inflation remaining higher than the central banks think they will. In fact, the markets, the bond markets, and a lot of the central banks think inflation will fall to maybe between 2 and 3%. And there is that possibility we might see high inflation continuing. We are seeing oil prices right now continuing to skyrocket. I think it's something like $120 a barrel right now. So what the market is saying is those companies that are growing the top line fairly quickly but won't be profitable for the next 5-10 years, those valuations have to be much lower in a higher interest rate and inflation environment, which completely makes sense. And that is why companies like Betmakers share price have taken a pretty big tumble over the past, we'll say 3, 4, maybe even 6 months. So let's get into it. And the focus of this video today is looking at Betmakers December quarter Appendix 4C, comparing it to last year. Also have a look at their half-yearly report that they released in February. Betmakers is a racing services technology company founded in 2009, listed on the ASX via Top Better. I still remember that company. And they went through this complete change in their business model around 2018, 2019, and then they became Betmakers, quite a few acquisitions, those sort of thing. Don't know the complete history of how this transition went through, but I still remember Top Better, and it's a completely different company than what we have now, which is Betmakers. They changed the name a few years ago. CEO is Todd Buckingham, 1.7% holding. One of the major shareholders is TexCorp, 10.3%. Now the market cap, last time I did a video, the market cap was nearly $1 billion. Now it's $542 million. That's at 60 cents. A lot of negative sentiment in this company. Don't know how low the share price can fall from here. It could fall a lot further and still be expensive, even if they do grow that top line, because if they grow the top line and don't have any focus on increasing profits or becoming profitable or increasing operational cash flow, free cash flow, the market still might punish these sort of companies. And the T code for Betmakers is, naturally enough, BET. Now I'm just going to have a look at a couple of Appendix 4Cs for Betmakers, December 2020, which would be the second quarter of financial year 21. And then we'll look at the most recent Appendix 4C. And then we'll have a look at some of the half-year numbers for the company. So let's go back 1 year ago to see how this company was performing. And the reason I like to do this is to see how the company has progressed over the past year, and also to eliminate any sort of seasonality. So that's why I like to look at the same quarter year on year, if that makes sense. So if we go back 1 year ago, receipts of customers for Betmakers was $3.9 million, almost $4 million. But the most important thing here is the company was almost operational cash flow positive, only negative by $170,000. However, they did receive $584,000 in government grants and tax incentives. Did major capital raising, and that's why the cash on hand increased from 32.8 to 68.6 million. Betmakers have done quite a few capital raisings, acquisitions, those sort of things. So the company is dilutive to its shareholders, and at some point they're going to have to go mostly through organic growth, not through acquisition. So that's the sort of thing I am looking for in a company, is that ability to grow organically, not through acquisitions. Acquisitions sometimes can help a company to grow, but it shouldn't be the main focus of growth for a company. That's just my opinion. So let's have a look at the most recent quarter to see how Betmakers have performed over the past year. And just by looking at the top line here, Betmakers is a high growth company, significant growth when it comes to receipts. In fact, it's up $20 million from just shy of $4 million to more than $24.5 million. So some of that is organic, some of that is through acquisitions. And the most important thing here when we look at this Appendix 4C, and the main reason I have really, or am really going to be keeping a close eye on this company, is they were operational cash flow positive in this particular quarter by $2.8 million. And if they can maintain this moving forward, this company will be looking way more attractive, particularly if they can keep on growing the top line, maintain a control on costs, and increase that operational cash flow. This company would be looking extremely attractive right now. They grew the cash on hand to $111 million, so plenty of cash on hand. So this company, I'm not sure about the debts, but this company, when you take into account the cash on hand, this company is even looking more attractive, because the market cap might be just above 500 million, but enterprise value might be in the 400 million range. So receipts up by $20 million. Product manufacturing operating costs up 5 million. Staff costs up 10.6. Administration costs up 1.9. Now, one of the reasons why cash on hand did increase from the previous quarter was because they received $8.1 million in the exercise of options. So that was highly beneficial to their cash on hand. They also spent $3.7 million in capital expenditure. So just based off the costs, a capital expenditure, if we take away the options, this company is still not free cash flow positive. So that is a next step for Betmakers in the next few quarters. They're obtaining or becoming a free cash flow positive is a very important step, possibly even an inflection point for this company, and hopefully management are on the same page as me. Now let's have a look at some of our half-year numbers. We already know this company is growing really quickly, and we look at the revenue, it's not quite quadrupled, but definitely in between tripled and quadrupled, from 11.9 million to 43.5 million. Gross margins increased from 52% to 74%, although I think the previous half year it was 74%. So it does look like gross margins can fluctuate quite a bit with this company. Operational cash flow positive in the half year, 1.8 million, and the majority of that cash flow, actually all of that cash flow, was because of the second quarter in the financial year. Last year, their operational cash flow negative by 700,000. So they have turned that around. Now, typically, I will ignore profit after tax, mainly focus on operational cash flow, because if you look at last year, a loss making by 13 million, this year by 27.8 million. And one of the reasons they were highly unprofitable was because of share-based expenses. And I do have a problem with that. I believe that directors, management should only be compensated when the company has had long-term success, not success based off short-term things. So they should be looking at like 5 years down the road, and if this company is significantly bigger, is profitable, cash flow positive on a consistent basis, that's when directors, management now should get their compensation. They shouldn't be compensated for stuff they've done in the past few years that haven't really transformed this company at this point in time. And when I say haven't transformed, haven't turned this company profitable or cash flow positive. And that's one of the biggest problems I have with companies is I think their compensation structures, schemes, are a little bit too generous for management and not really focused on growing wealth for their shareholders. It's all about growing wealth for themselves, it seems like. That's just my opinion. I could be totally wrong, and you could totally disagree with me. And if you do, leave a comment in the comments section. Cash on hand, $111 million. Price to sales ratio, 9.8. The last time I did a video, the price to sales ratio was something like 46. And the reason that has come down a lot is because of significant growth in revenue. And 9.8 price to sales isn't that high if you're talking to me. So that's coming more in line with the sort of valuation that I would expect for this type of company. And the main thing moving forward for Betmakers is if they can continue to grow at a fairly quick rate, maintain a control on costs, this company could become highly profitable. Now, one of the problems with maintaining that sort of growth rate this company has seen in the last few years is a lot of that growth is through acquisitions. There is some organic growth here, and if we look at the receipts history for Betmakers going back to the December quarter 2018, we have seen significant growth in the receipts over the past 6 quarters. If we go from December quarter 2018 to the September quarter 2020, the receipts weren't growing all that quick. So a lot of this growth is because of acquisitions. There is some organic growth here, but in saying that. Anyway, significant growth in receipts through time. And we have seen it grow from 1.8 million to 24.6 million. And I don't think I have to say anything more here. I would expect receipts to continue to grow, maybe not as quick as what we've been seeing in the past. And this also depends on any acquisition the company makes. And that's really hard to discern or figure out right now because I don't know what the management are thinking. I don't know if there's any acquisitions in the pipelines. And whenever people are trying to figure out the future of a company, those sort of things are way out of our reach of understanding. We just don't know those sort of things. And that's one of the problems I do have trying to figure out how successful a company will be in the future because we just don't know what management are going to do in terms of acquisitions, capital allocation, that sort of thing. If they do capital raisings, how dilutive the management will be in terms of shares. If they do capital raisings, acquisitions, this company might have tripled the shares on issue by this time in 3 or 4 years and still be a bigger company, yet the valuation will be even smaller because of that dilution. When I say valuation, I mean on a per share basis. We might see the share price and the valuation higher, but on a per share basis, it might be lower. So it's really hard to know the future of these companies. I think if you're bullish about Betmakers, a lot of that bullishness is having trust in management, and management will do the right things for this company and their shareholders. Now let's have a look at the daily chart for Betmakers going back to July 2020. And from July 2020 to late May 2021, share price or the shares of Betmakers was in a well-defined uptrend. It would have been an awesome time to be a Betmakers shareholder during this period because the shares of the company quadrupled in less than 1 year. So from July 2020 to late May, they quadrupled from less than 40 cents to a high of $1.60. And if you were perfectly able to time the market with this company, you would have done very well and would have been very happy. But then in late May, there was a definite sell signal when it came to Betmakers. Share price fell in consecutive days on massive volume. In fact, the share price fell from $1.57 to about $1.15 in those 2 days. At the moment, I forget exactly what that announcement was, but I think it has something to do with an acquisition. But whatever it was, the market absolutely hated that announcement, and that was the end of the uptrend because that negativity that it now came or crept in to the trading of Betmakers. And then for the next 6 months, the shares went sideways, but there was a lot of volatility. So at some points during that 6-month period, the bears were in control, and at some points the bulls were in control. I could see at one point the shares increased from about 86 cents or back to about $1.40 over a couple of months. But generally during that period, and you can see with the moving averages, they were just going sideways. So a lot of indecision between who was going to win between the bears and the bulls, and eventually the bears won because the shares of Betmakers moved into a downtrend in November, and over the past 4 months, the share price or the shares have moved down from about $1.15 to a current share price of 60 cents. Now, in saying that, and also saying we just don't know how low the shares can fall, there is a nice little support level right there at around about 57, 58 cents. The shares of Betmakers fell below that support level briefly, like about a week ago, and then moved above it. So there is a potential buy zone right here at 58 cents. But the problem is, one of the reasons why the shares of Betmakers have been falling is because general negative sentiment in this space, these sort of areas, these high growing unprofitable companies, although you might say Betmakers could be showing some signs of moving towards profitability, but just because the overall negative sentiment in this area, there is potential that could lead the shares of Betmakers to fall further from here. But a nice little support level here, so potential buy for those particularly who are bullish about Betmakers over the next 5 to 10 years. That's all I have for this video on Betmakers, a tribute to Shane Warne. Something I didn't mention before is I was there on the last day he played for Australia at the SCG this January 2007. We only saw one session on that last day, but that was some fond memories of Shane Warne. I think it was Glenn McGrath, Justin Langer, maybe Matthew Hayden, but definitely those three had their last game or day playing for Australia in the Test arena. Always remember that day, absolutely spanked England 5-0 in that Ashes series. So if you want to leave any of your memories about Shane Warne, leave in the comment section of this video, or if you want to ask any questions about Betmakers or any companies on the ASX, leave in the comment section of this video. And last thing I should also mention is I'm not a financial advisor or a cricket expert. So if you need any sort of financial advice or cricket opinions, how to play the game, make sure you find someone who is experienced and qualified and can speak to your own financial needs or cricket needs. That's it for this video. Have a great day. Bye.